What's good, y'all? It's Joe, and I come back at you with another video. So for this video, we are going to be doing the trade breakdown for May 29th, 2024, and just a breakdown for S&P 500, a trade I took for S&P. Um, Now, I know I don't normally show like the side by side, right? This first chart on the left is NAS 100, and the chart on the right is SPX. This is how I usually trade. These are the only two pairs I focus on every day. I only trade New York session. So from 9:30 to 11 o'clock is when I look for my setups. And pretty much the days that determine when I'm behind the charts is Forex Factory. So this is the week. Of course, recently on Monday we had Memorial Day weekend, and on Tuesday there basically wasn't a trade. Nothing materialized on that day. So for this day, on Wednesday, May 29th, we didn't have any news, which means that the only thing we have to worry about is 8:30 stop hunt. Not sorry, not stop hunt. 8:30 is when the hunt begins as far as like the market the algorithm starts moving towards liquidity. But more importantly, we wait for the 9:30 stock market open, which obviously that is what affects NAS and SPX, which are both directly tied to stocks. So jumping right in, if we look at both pairs, right? If you see NAS 100 and SPX, I have different biases for each, right? So for NAS, I'm still bullish on NAS. Obviously, as you're seeing, like it looks like prices beginning to slow down before reversing, but it hasn't given me any signs of a reversal yet. So I'm basically maintaining my bullish stance on NAS just because you can see it's pushing higher, higher. Like, of course, this candle here went up and wicked really fast back down, but then you're still seeing bullish candles go up, and does not appear that there's been like a liquidity grab and then a reversal, like a break of structure. Like, there hasn't been no break of structure yet. There hasn't been, fair value gaps that were blasted through, as far as like going bearish. Um, So because of that, right, I'm still bullish on NAS, right? Sorry, I'm still yeah, I'm still bullish on NAS. As for SPX, I'm bearish because as you see here, this candle, you see the long wick that looks like it cleared um buy side liquidity, right? Like this looks like a double top or quote unquote resistance, right? This candle here rushed through it really fast and then came back down and went bearish. And as you can see, this candle, when it pushed down, it cleared the low under this level here. So it technically did a liquidity grab and broke structure the other way, even though there wasn't no bearish fair value gap that was left. That is more than enough for me to shift my bias to bearish on SPX, right? Because right now the signs are pointing to that it wants to go lower, right? That it wants to be bearish. So, even though for the most part NAS 100 and SPX they move in tandem, there's some instances where you may have differences in bias between the two pairs in this case, right? NAS, I'm bullish on NAS, SPX, I'm bearish. So that is obviously important information to keep note of when we're trading. So here we go. I basically um, put the candle replay until the 8:30 mark, right? We're on the 15-minute time frame now. So now we have both currency pairs here. And just to give you guys a reminder, right? Show you this is both bullish. Oh, sorry. I don't even know what that is. Bearish, right? So this is just for the higher time frame, like for daily. And I guess I'll just, make it easier for you guys. Just write daily so you guys remember. So I don't really need this, but this is for you guys just to remember, right? So you can understand the logic when it comes to trading. Because personally, I feel like I take more trades on NAS and I prefer trading NAS. But obviously, if an opportunity presents itself on the S&P, then I'll gladly take that as well if it aligns with all my confirmation, right? So honestly, it literally depends on what price is delivering, right? The story that it's telling that determines which pair I trade essentially. It's literally that simple. So differences in daily buys. But now we are at the 15-minute time frame. Now we want to mark the liquidity pools. So this is a 15-minute candle from 8:15 to 8:30, right? So from this point on, we want to mark the liquidity. Actually, sorry, we'll just skip one more candle. Boom here, and then we'll skip one more candle. All right. So the reason for this is because you basically, to keep it super simple, right? At the 8:30 mark, you essentially can put a vertical line, right, at the 8:30 candle, and then you want to look left. It's like, where is the most obvious swing high and swing low to mark the liquidity pools? So in this case, right, the most obvious buy side liquidity would be this high right here that formed, you know, prior to 8:30. Well, yeah, because the 8:30 candle pushed down, which made it a high. But yeah, obviously this is the most obvious high before 8:30, and same here. So we have the same buy side liquidity that's marked for both sides. Now, now we want to mark sell side liquidity. So obviously, if we look to the left, the most obvious sell side liquidity, in this case, it's this low right here, because you can see, right, it formed a little low. Now, unfortunately, the 8:30 candle, once this candle opened up, it cleared it already. So it cleared this low and this low. So it really doesn't matter which one you selected because both lows were cleared. And the same idea here, right, for SPX. This is the most obvious and recent low prior to 8:30, right? Because you see it makes a swing low, and then at the 8:30 open, it blasts through. So it blasts through this low and this low. So it really doesn't matter which one you choose. I'll just choose this bottom one to give us more space, but in actuality, I would have chosen like the other low right here. So now at this point, we could just jump into the 1 minute, see what's going on in the 1 minute time frame. Um, Now obviously right here, if you see the vertical line, that's where the 8:30 open happened. Well, like where the hunt begins for the market, right? 8:30 here, and as you can see, right after 8:30, it blasts through sell side for Nas as well. After 8:30, blast through sell side. So pretty much the same story is being told on both pairs as of this moment. So now what we want to start fast forwarding until 9:30. So I wish it did it for both, but we'll just, you know, take turns for each. So, right, okay, so obviously you can see for Nas, this big pair, this big candle here was the 9:30 move. So now we'll do the same for SPX, right? I want to show you guys the logic using both pairs so you guys can understand how I decide on like what to trade. Um, so 928, 929. So this big candle here, right? This is 9:30 open and this is 9:30 open. So remember, if we bring in the bias that we had, right? So it's front and center for everyone. So as you can see here, right, we have the 9:30 opens for each side, right? For Nas is daily bullish and for SPX is daily bearish. So for Nas, essentially because I'm bullish on Nas, what I want to see is I want Nas to eventually make his way down, right? And I'll make this mark this red because I'm bullish. So I want to see sell side get grabbed before making its way back up, right? So I want to see Nas come down and make the low of the session, right? Because if you notice here, this bullish candle is a 9:30 open. It went up. It never cleared this low. So this low right here is still the low of the session, right? And for me, I need after the 9:30, either at 9:30 or ahead of or past 9:30, right? Anywhere from 9:30 to 11, I want to see the highest high or the lowest low essentially of the session get made, right? Like I want to see liquidity pool get taken, and if it did, I want the highest high, the lowest low of that session to be made. So in this case, sell side got taken, you know, at 8:30. Great. Now after 9:30, I want to see price go under and clear this low to make the new low of the session. And then I want to see price break structure, right? Say broke structure here and then enter a fair value gap before going up and up and up back to buy side liquidity. So sorry for the horrible drawing, but we're playing the game of liquidity, so I want sell side to get taken. Now I'm basically seeing it because sell side got taken. I'm basically seeing this right here as the new sell side liquidity that I want to be cleared. Like I want external liquidity to get cleared before making its way up back to buy side. So that's what I'm looking at for NAS. If NAS doesn't deliver me that, I literally do nothing. For SPX, I'm literally looking for the exact opposite because I'm bearish. So for S&P, any way to change the color before I draw? Okay, I guess not. So for S&P, right, we see a bullish candle, which is a great sign, right? So I'm bearish. So I'm essentially want price to make its way up here, clear this high right here, buy side liquidity, and then, right, I want price to come down, break structure, and then return into a fair value gap. How do I move this? Yep. Return back into a fair value gap, and then make its way all the way back down to take this as the final target. So literally exact opposites of the two pairs because we have differences in daily bias. So what we'll do here, we'll go through NAS, right? So remember, I want this low to get cleared in order for me to do anything. And as we continue on with NAS, right, NAS comes up and clear buy side, which is not ideal for me, but obviously I need this low to get cleared in order for me to take a buy and want to go higher. Like I'm only going to trade in alignment with the daily time frame. So if Nas doesn't want to clear sell side liquidity, then there's nothing for me to do, right? So we just keep fast forwarding with Nas, right? Pretty much price just keeps pushing up and up and up and up and up, and it literally never comes down and clears this low. So because that's happening, right, and this low never got cleared, I didn't do anything for NAS. So I basically, put that currency pair away and I'm focusing on SPX. Obviously, when this is happening live, both pairs are moving at the same time. So I know what I'm expecting for each pair. In this case, for SPX, I want the exact opposite to happen. Or pretty much like what Nas was doing, right? As far as I want buy side to get taken so then we can move down to sell side. So sell side was taken, is not that big a deal, right? Because right now in my mind, this is the final target that I'm looking at, and we're bearish. So perfect world, I want this high to get taken so then it could push lower. So as we progress, right, it's 9:30, the low gets cleared again, and it keeps getting pushed deeper and deeper, which is fine. Now if you look at this, price pretty much, well, price pretty much made a double bottom. So uh, retail traders see this as support, so they're buying here. But in my mind, right, because I trade in alignment with the market makers and liquidity, I see this as liquidity, as money being built up under here, which is a great sign because if I'm bearish, right, that is a very obvious target, a great final target for me to go after if price delivers me what I'm looking for. So we keep going up, and obviously price broke structure and left fair value gaps and all that stuff. But remember, I'm bearish, so I'm only looking for sells. None of this stuff interests me whatsoever because I want to trade in alignment with the trend. So price keeps going, keeps going. Remember, I'm looking for a trade between 9:30 and 11 a.m. So that's the only time frame where a trade idea can present itself for me to take. If it doesn't happen within that time frame, then I don't trade. So it's pretty black and white. So as you can see, price is pushing higher and higher and higher, which is a great sign. And ultimately, you see here with this wick right here, you see it clears buy side liquidity. So that is already the first confirmation. So because buy side liquidity got cleared right here, I am now looking to see if price is going to deliver a break of structure. So the last structure point, the last higher low, is at this wick right here. Now, it's entirely possible that price could make an aggressive move down and break this structure point and break this structure point right here. But right now, this is the most recent structure point. So I'm just marking it so you guys can see that instantly once buy side liquidity gets taken, the moment this price spikes through, I'm instantly looking for where is the structure point because I want to see a break of structure, right? I want to see break of structures happen after liquidity gets taken because then it's highly probable that it'll want to head in that like the opposing direction, which is what we want, right? Since we are daily bearish on this price on SPX, we want to look for sales. So liquidity got taken, and this got taken at 10:36. So we're getting close to 11 o'clock, right? So pushing higher. Obviously, this high got cleared again with these two candles, but right now these are equal lows. Like it didn't make a swing low, so this is still the last structure point. This is still valid. All right, we're seeing price push down, go up. It went up and filled in this gap here. So for me, I mean, obviously it's a fair value gap, but it's not valid in my eyes because I want to see a fair value gap left open when it breaks structure. So as you can see here, price came up and cleared this high again. So these are good signs, right? Because if price doesn't go down aggressively and break structure and leaves a gap, you basically want to wait for it to clear another high again, which in this case it did, right? This got cleared with this candle up here. So now buy side liquidity got cleared again. Now what I'm seeing is this is now the last structure point, right? Because it is a swing low. So in a perfect world, I would like to see price come down, blast through this level here, and leave a fair value gap. So as we continue on, it's another good sign. Oh, not really. Oh, price comes up here. Obviously with this candle here, it clears this high again. So we're seeing buy side liquidity get taken again. And with this three candle pattern, we're seeing a low get formed under this candle. So I'll space it out for you guys to see it better, right? So you're seeing clear as day, the left candle is higher and the right candle is higher, and this candle is on an island by itself. So this is the last structure point as of now. And it's 10:52 right now. So we keep fast forwarding it, right? We're seeing bearish candle, bearish candle, bearish candle, another bearish candle, which it didn't break it yet. It's still at the same level. Boom. So as soon as this candle passed through this level here, it didn't matter that it didn't close under. The second it went up past it, in my mind, that's a break of structure. So what I'm looking for, this is a displacement low where the last structure point was before the break of structure and the displacement high. So this is the range that I'm looking for a fair value gap to fall within. Obviously, we see the fair value gap right here. This is the fair value gap that falls within the displacement low, displacement high. This is the displacement range. So you want the gap to fall within the range. So because this is a smaller fair value gap, right? Um, for me, I had my short ready here. Stop loss obviously above the high, and then final target. Oops. Final target was at this level down here for a 1 to 7 risk reward. So because this is a smaller fair value gap, relatively speaking, right? I basically went in with half risk because two reasons. There's a smaller fair value gap and it's already like this candle here is 10:57, 10:58. So it's already getting close to 11 o'clock. So basically, if this trade does not activate by 11 o'clock, I delete the limit order or like I just close trading view. Fortunately, right, 10:57, 10:58, 10:59. So this is the candle at 10:59. The trade gets activated. So I'm in the trade. Obviously, my final target is all the way down there for a 1 to 7, but I am not a greedy trader. So I like taking partials along the way. So once I saw that this trade had activated, I went on the 5 minute to see if there would be any swing swing lows, like any 5 minute lows that would get taken, so that obviously you want to plan out your trade. So in this case, right, I see this obvious swing low here that I'll mark purple because candle to the left and the candle to the right of it are, sorry, the candle to the left, excuse me, the candle to the left and the candle to the right of it make a low. So this was the closest 5 minute low. So in my mind, once price passed under this level here, I would basically move my stop loss to break even to have a risk-free trade. And if I bring the risk reward up, it's a 1 to 50. So I actually don't mind taking off at least 20% of trade, maybe even 50%. Depends on how you decide to set that one up. But then this is when I like to whip out the fib, because I like to see where our obvious targets, right? So here, this is where I would move my stop loss to break even and take partials here. You also have a low here, right? A low here. You have a massive fair value gap here, right? You have another low here, fair value gaps, and the final target. So it's honestly up to you how you decide to plan the trade. The way I did it, I'm pretty sure I took off um like I had planned out maybe like stop loss to break even 20% here, then at this low 50%, and then 50% of the fair value gap, which is maybe around this level here. Um, I want to take off 80%, and then I would have done 90% here, and then 100%. So you can also like write it. You can also plan your trade off like this, which is what I was doing. So there's no, there's no confusion, right? So you're basically planning it out so that when it's happening, you don't have to think about it. You're just like, okay, I decided on this, take off this amount, this amount, this amount, this amount, and then whatever profit ends up being what you walk away with is what you walk away with, because you're better off taking partials so that you're growing your account. Because if I take partials, then I won for the day. My account grew, which means I had a successful trading day. If I didn't take partials and the final target doesn't get hit, and I take a loss, then it's basically like I took an unnecessary loss for no reason, right? When it comes to trading, you want to mitigate your risk as much as possible, because that's what keeps you in the game for longer. So in this case, right, price came up, tapped the fair value gap, and obviously I have my trade planned out as far as what I'm gonna do along the way. Um, with the majority, like the big bulk of the position being taken out, like halfway through the entire range from this high up here to this low. This is the entire trading range. Um, and 80% comes off at like 50%, which is great, right? Because then you could like let the rest run down to the end, and if it doesn't make it to the end, who cares? Because you took off the majority of the position. So what happens? And then we fast forward one candle at a time, right? Boom. So 1, 2, 3, 4, 5, 6. So about 7 minutes into this trade, boom, price broke this level here. So I would basically move my stop loss to break even, making it a risk-free trade, and I took off 20% of the position, meaning that I walked away with some profit. And then the next candle, it taps this level. So I remember at this candle, I basically, yeah, took off 50%. Um, should have waited for it to blast through, but it's fine, the same thing. Price eventually blasts through, right? I already took up 50% of the position, so this is risk free, so I'm chilling at this point. If it hits the next target, then I'll take off another 30%. Boom, next candle took off another 30%. At this point, 80% taken off. Is up to you if you wanted to watch price for it to hit these levels here, or if you just at this point, you can click it and even set an alert to alert you if you wanted it to, take off the partials, or completely get rid of this and just ride it to the final target. But in short, majority position taken off and let the rest ride. Fortunately, um, price, you keep going, blah blah blah. Price goes a little lower to clear out uh this liquidity here, right? You see price came down and stabbed right through it, and then it reversed against us, which doesn't matter, right? Because we protected our position. It was at break even, so we didn't lose any money on this trade. And then, funny enough, right, if you give it enough time, I play it, right, go to 5 minute, you see that price eventually does blast through to the final target. So obviously, if we didn't move our stop loss to break even, we would have been stopped out at this level here. But that's why you take partials. You take partials because there's no guarantee that the market is gonna hit your final target, and that is an ambiguous goal of getting done. It's very possible on most days, but ambiguous still. So I'm just gonna, sorry, not ambiguous, ambitious. It would be an ambitious um, hit of a final target, which is possible on most days, but you don't want to risk that if you can just take partial on the way and walk away with profit. So this is what it means to be a profitable trader. Profitable trader doesn't mean being right every single time. It doesn't mean having your trade go to the T, like planned out perfectly every single time. It's also about, you know, um, reacting and responding to the situation at hand, and obviously being able to take partials. There's only two things that's guaranteed in this market. It's guaranteed that you're gonna take losses because there's no 100% success rate strategy that doesn't exist. So you're guaranteed to take losses in this industry. And the only other guarantee in this industry is partials, that if you take a partial profit, that your account balance is gonna grow. Not saying that it's gonna continue growing and just like guarantee that you're gonna be a profitable trader. No, it's just that in that moment when you take a partial profit, it's guaranteed that your account will move up. It will move upwards in that moment, right? So those are the only two guarantees. In this case, I took partials and protected my account. So for this trading day, doesn't matter what happened, my account went up, and that's all you can ask for. But obviously, like the final target got smashed. So that is pretty much the trade breakdown for Wednesday, May 29th.